Okay,
So we're recording now. If you're ready, we can begin.
please. Yes.
Good afternoon, Mr. Arjun Murti. Thank you very much for doing this yet again.
Trevor, it is great to be back. I'm an avid listener of your show, and so I really appreciate your having me today.
Well, I really appreciate your support here and there, and some of your colleagues have been on the podcast the last year or so, so it's a small world.
I think my colleague Maynard you had on, so
Mhm. I know your time is valuable, but I appreciate it. Are you getting much golf in these days? I know you're a golfer.
we are I live in the U.S. Northeast, so we are in the solid off-season period, but had a trip for the Goldman Sachs conference to Miami and got a round in down there. So the sporadic round here and there, but
Mhm.
feel like we're still a good month and a half away before we can get going again. So
Some of the best rounds are the first rounds of the year when when you haven't played, maybe you're not overthinking it, maybe. Give it
I
a
will
break.
guarantee my low score for the first month and a half will be round one, and it'll
Yeah.
only be downhill from there. So
For the listener, you were also recently named to the board of Liberty Energy, founded by the new U.S. Energy Secretary Chris Wright. So, congratulations.
thank you. I'm a huge fan of Chris, and obviously the fact that he's become our energy secretary, I think, is a tremendous development. But really, his bettering human lives that he is most responsible for, that Liberty publishes, I view it as sort of the spiritual twin to my publication, Super Spiked, and just trying to be pragmatic and forward looking on energy, and really a pleasure to join their board.
I thought for the purposes of today's conversation, we could structure it around a few questions on the recent article you had on the end of the energy transition era, and then get your thoughts on some current events, if that works for you.
That sounds great.
So, for the listener, what is what was the energy transition era, and why is it ending?
It's a great starting point. And you referenced my writing Super Spiked, and it's for free for anyone interested. But and we've been through a little bit of this history last time I was on, but I was a equity research analyst at Goldman and elsewhere for 20 years, and then had stopped. And I was enjoying my quote retirement and serving on boards and doing some advisory work. But it was really 2018, 2019 when sort of quote the energy transition. I want to be very clear. This sort of, I'm going to call it very narrow perspective that somehow the world can, should, and will quickly transition off of fossil fuels by 2050 and only go into renewables. No part of that ever made sense. And you had a lot of sort of focus on net zero is all that matters, and all companies need to change their business strategy, and oil and gas is going to go away. And that motivated me to quote unretire, to start writing Super Spiked, to join my friend Maynard and others at Veriten. And I think the absurdity of that whole effort, it started to grow on people. Russia, Ukraine was the first instance of, wait a minute, geopolitical security still matters. Uh, Trying to disincentivize production in friendly areas like the United States, Canada, and Europe doesn't make sense in a world that it's just going to shift elsewhere. The timing of the economics of when hydrogen and all these things are going to ramp up was generally way overstated. And I think the world was on track to move away from, again, that very narrow definition of the energy transition. It is likely that the election in the US or re-election of President Trump in November has simply accelerated the shift to what we're going to start calling the rise, perhaps the return of energy pragmatism. And I think that'll be our focus going forward.
Roughly described as ending in 2024.
I think 2024 will be our end date. Born in 2018, 2019, I sort of dated to when I believe it was Repsol, but it might have been a different European company, came out with the first net zero by 2050 objective or promise or aspiration, as it might have been for any company. And of course, most companies in most sectors suddenly felt a lot of pressure to adopt similar type narratives. I'm going to say that whole era ended in 2024, and that's, by the way, not to say we shouldn't care about environmental or climate considerations. It's not to say there shouldn't and won't be a whole bunch of investment in new stuff. It's really that very ideological approach that the world's going to somehow prioritize carbon emissions above all other objectives, of which I would argue there is zero evidence anyone, anywhere does that, whether it's rich countries like the United States and Canada or the developing world, China, India, and so forth. No one prioritizes carbon emissions. Everyone prioritizes availability and reliability first, affordability and geopolitical security second. And then with all that, and once those are satisfied, ideally one is addressing environmental, including climate considerations. But we were upside down on what we call our hierarchy of needs for the previous 5 years.
So why was the prioritization of net zero carbon emissions above all other objectives incorrect?
I think it was incorrect because it forgot that no one thinks about energy in terms of their carbon emissions. All anyone thinks about anywhere is, does energy work for me today? Am I able to drive my car, whether it's electric or gasoline? Do my lights turn on? If you're in a colder climate, does the heat come on? If you're in a warmer climate, does the air conditioning come on? But there's nothing the world does that doesn't require energy, whether it's the Zoom meeting that we're on, whether it's the clothes you and I are wearing, never mind powering and electrifying our houses and automobiles and so forth. It is anything and everything. It is one and one synonymous with economic activity and, frankly, increasing prosperity. If you are becoming wealthier as a society, you are using more energy. We spend a lot of time emphasizing the fact that there's the lucky 1 billion of us, me and you, Trevor, who live in Canada and the United States, but also our friends in Western Europe, Australia, New Zealand, Japan, who use a disproportionate amount of the world's energy, and the rest of the world is trying to catch up. And that has always been the focus. I think we were coming off a decade where energy was very inexpensive. Most people are not well educated on how fundamental energy is to everything we do. And therefore, they started prioritizing other objectives. And I think the world just got not, it's not that it's wrong to focus on carbon emissions, it's just never the priority would be our perspective.
So why is it that as a society becomes energy rich, part of which is fossil fuel based, that carbon emissions actually go down?
Well, I think so. If we think about the long-term challenges of what could cause us to decarbonize, I would argue that when you solve for billion-person scale economies, let's look at China and let's look at India next, as they ramp up, and especially if they happen to not have sufficient amounts of crude oil, or for that matter, natural gas, they're going to be very motivated to try and crack the code on what comes next. You can already see this in China. They went from zero to about 12 million barrels a day of oil imports. They consume 4 barrels of oil per person in China. The rich world does 13. In Canada and the US, we're over 20. South Korea is over 20. Other places are anywhere between 10 and 20. They are still a fraction of that, yet with 1.4 billion people, are now importing 12 million barrels a day. And if they simply went from 4 barrels per person to Thailand's 6.5 barrels per person, it's another 8 to 10 million barrels a day of oil imports. Never mind if they got to Europeans' level of oil use, or for that matter, US, Canada, or South Korea. And so you see China's reaction to that. We're going to focus on electric vehicles. We're going to aggressively cause them to ramp. Some of that's through policy, some of that through, frankly, some good technological progress from the likes of BYD. I think we often sort of attribute everything to the state, but let's give some of those companies credit in China for figuring out some, frankly, pretty cool electric vehicles. I think better than what we are able to drive here in the US, and much cheaper. LNG trucks is another example. They're doing everything in their power to diversify their energy mix. And I fully expect India to try to follow suit. India today is at 5 million barrels a day of oil demand, 1.4 barrels of oil consumption per person. If they ever got to 10 barrels per person, which I don't think they will, it's 45 million barrels a day of oil demand, of which almost all of that would be imported. So they are also going to be highly, highly motivated to figure out what comes next. So I'd argue when you try and solve for geopolitical security, when you try and solve for affordability, which could mean capital flows, in and out of these countries to buy energy, you're going to want to be domestic. And that is, to me, the core advantage of a lot of new energies. And so someone will say, well, wait, you didn't talk about carbon emissions in any of that. And so I would argue, as you diversify your energy mix, you are almost by definition going to be using non-fossil fuel-based energy sources. It doesn't have a neat timeline like 2050, but honestly, that was never on track to be achieved. So I don't have a catchy, here's the new year, it's going to be achieved slogan. I do think it's the reality of what the world focuses on. I'm not even going to use the term morality. I'm just going to use the term, there is no evidence anyone desires to be anything other than enjoying the kind of lifestyles, again, we take for granted. They may not get there, but they're aspiring to it. So I think the world will decarbonize, but it's going to be motivated by these big economies cracking the code, if you will, on what's going to scale up. We just don't know the time frame.
Abundant energy that is reliable and cheap provides the basis for maybe a wealthy society, which enables further decarbonization, maybe simply put.
And there, exactly, Trevor. But there's also lots of choices if one really did care about decarbonization that one could take. So in the US, for example, a state like California has decided they're going to ban internal combustion engine vehicles by some near-term year, 2035 or something. It's an absurd goal. I drive an electric vehicle. I love it. I'm
Mhm,
also a retired Goldman Sachs partner and now a partner at Veriten. I'm really lucky.
mhm,
I'm able to afford one. I'm able to have a house where we can plug it into our garage. And I drive a grand total of about a mile and a half per day. So there's no issues of trying to find charging stations in my personal case. The idea that you can have the
mhm.
middle class and the working class, the vast bulk of which is America, as opposed to the affluent, driving only electric vehicles and it's a ridiculous objective. What if instead we put a restriction on vehicle weight? Now, that's not as popular. So in America, and this is true of other parts of the world, we've gone from 70% light cars to 70% SUVs. And we've basically offset all
Yeah.
of the improvement in fuel economy by driving heavier cars. So I'd say for everyone who cares about climate or environment, why is there not a hue and cry to restrict vehicle weight? You would actually, I'd argue, have a much more meaningful and larger impact, and then figure out the things to motivate the critical minerals and mining and refine and minerals processing and refining supply chains so that we can develop it here in the US just as China has done. So perhaps we could bring down the cost of batteries and so forth. And so we won't suddenly become, instead of dependent on Saudi, dependent on China for these kind of things. And I think it takes that type of holistic approach, not slogans that try and browbeat people, frankly, incorrectly, into something that's not achievable, again, net zero by 2050, and that no one actually wants. No one aspires to that. Not a person on earth. Let's control our methane and flaring and venting. I support those kind of goals. So again, none of this is about being, quote, anti-climate or anti-carbon emissions. It's about pushing back on the narrative that climate only or climate first is somehow the path forward. When again, I would argue not even environmentalists pursue that path, let alone broader society.
Speaking of environmentalists and the far left movement, since wealth is mostly predicated on cheap, reliable, abundant energy, a good chunk of which is fossil fuel based, and wealthier societies generally have less population. To what degree do you think the far left green movement have got their priorities wrong targeting the fossil fuel industry?
I don't like to actually lecture. I don't want my comments to come across that way towards the environmental and green movement. And I would say this, I'm glad we have had environmentalists that pushed back in the 1970s on dumping chemicals into rivers. That was a bad practice. Environmentalists probably started pushing back on it. The rest of the population got on board, and we don't have polluted rivers for the most part anymore. I'm glad environmentalists stood up for the smog that existed in, say, Southern California. And even when I went to college in Denver in the late 80s, early 90s, we would get these, quote, brown cloud days where it'd come over the basin. And I think that was pollution from California, if I'm not mistaken. But we ended up having environmental standards, CARB gasoline, and so forth to reduce the smog. So I think there's a very important role for environmentalists. And I actually believe they should fight for what they believe in. I would actually squarely put the blame on politicians who, in trying to get votes or for whatever the reason, sometimes take the easy way out. So again, rather than put a vehicle weight restriction, they'll just say, let's just ban, ICE vehicles because we'll get some environmental community votes on that. So I'm always going to put the onus on elected officials and the population to vote for people who are going to have the kind of policies that support healthy economic and I would argue energy growth. And I think the world needs and benefits from environmentalists. If I was to give them advice, let's just say I'm never going to convince them to like, quote unquote, like oil companies. And that's fine. I'm a Wall Street person. We don't like every oil company. I mean, for sure we don't. We get plenty mad at them when they, cut their dividend or miss the production forecast or what have you. So we might have some common ground there. But what I'd say is please start with the companies in other countries rather than the companies in your own country. So why not go protest National Iranian Oil Company, Lukoil, Gazprom, and other countries and companies like that first? And you could say, well, it's harder to have an impact in those countries. They're far away. We may not get access or visas or what have you. I'd still argue you make all of society worse off by starting by critiquing and trying to shut down the companies in your own country. All you're going to end up doing is what the United Kingdom has done, which is export their emissions to other parts of the world that frankly have worse environmental, climate, and labor standards than would the United Kingdom. And so I would hope environmentalists can figure out ways to put pressure on other countries first before they do their own. It doesn't mean there's not room for us to improve. We can and should do better. But this idea that we should, quote, keep it in the ground in Canada or the Arctic for Alaska or Canada or the US or Europe, it's already happening. None of that to me makes any sense.
Where do you think the incorrect assumptions on the obsession of net zero carbon emissions and quantifying carbon ideas came from? Do you think it's just an easy label to put on things? Where do you think those ideas have originated from?
I suspect there are both sincere and legitimate concerns about just unabated carbon emissions, but there might also be another element to it, which is I don't like the capitalist societies we live in, and we need to move to socialism and so forth. And I think they all kind of get mushed together, and I think it's worthy of parsing out. So I say on my Twitter X profile, I am pro-capitalism and anti-socialism. So all the efforts that would fall into, hey, you know, let's get rid of capitalism. None of that stuff would I agree with and I'd push back hard on. So if I just focus on the folks that sincerely believe and have sincere concerns,
Mhm.
irrespective of your economic system, that there's just too much carbon going into the atmosphere, and whether that's the next 20 years or the next 100 years, whatever the time frame is, we're going to need to deal with this. If I address those folks, I don't think it's so much that they're necessarily misguided, but I think they're being unrealistic about what the world prioritizes. And that by focusing on what the world prioritizes, I already used my example of China and India and their desire to, I think, get off oil or not use as much going forward. I would just encourage them to be realistic about what, our hierarchy. There's no evidence anybody doesn't prioritize availability. Germany is often known as one of the most climate conscious countries, shut down their nuclear plants for some reason. But as soon as Russian gas was cut off, we know they started burning not just any coal, but the worst kind, lignite. So again, there's no evidence that even highly, quote, climate conscious countries choose anything other than availability and reliability. So I don't understand why people pretend otherwise. Again, it doesn't mean you shouldn't care about carbon emissions if that's your thing. But if you don't solve for the reliability, you've solved for nothing. And let's stop pretending. There's a lot of false information that the new stuff is highly economic. That is absolutely not true. So
Mhm.
solar might be very inexpensive on a variable cost basis if you don't adjust for reliability. Once you firm it up, suddenly it's a much more expensive form of power, and it's going to vary. And why do we pretend solar is great everywhere? It's probably great in the Middle East. It's probably great in desert communities. It's probably great in India. Maybe not so great in Germany. Maybe not so great in the United Kingdom. I'm not an expert on solar radiation in Canada, but guessing, solar may make less sense in vast swaths of Canada or the northern US, as an example. So again, we need some energy realism. We need some energy education. Doesn't mean my views are right, but I can say those that are most ideological about net zero, again, I'm going to push back hard that we're on track for any of that.
And since reliable, cheap, affordable energy is correlated to economic and development in technology, which correlates pretty well to human prosperity, you could say these are all good things.
They are absolutely all good things. I mean, a lot. So I'll use the term everyone deserves to be energy rich, and I mean all 8 billion people on Earth. And I really do not understand the perspective that we're going to kind of lock in wealth for the billion of us and somehow assume or forecast that the other 7 billion people are just going to stop economically developing, or that that quantity of people within the next 25 years now to get to 2050 are only going to use, frankly, renewables and electric vehicles and some few additional green hydrogen. It's absurd. It was never on track. And frankly, Trevor, it doesn't matter what I think. And with all due respect, it doesn't matter what you think because we are not going to determine the policies and the fate of those countries. The colonial era ended a long time ago. India is going to do what it views as it's in its interests in the same way China has. And they've massively grown their coal. They've massively grown solar. They've massively grown wind and nuclear and oil and natural gas because you need all forms of energy. You obviously do. And they don't have as much oil. So now they're trying to figure out ways to electrify their transportation mix. And they're frankly, they've been quite successful at that. We'll see if India can be as successful or if there are other things India should do. It looks like India, unfortunately, is following the US SUV craze. It's still early days in India. They have a chance to arrest that, figure out ways to motivate smaller and lighter vehicles or other things to not become an SUV crazy society. So, but again, the bigger point, the rest of the world's going to do what it's in its interests. It's never been up to us. It's never been up to the IEA or the United Nations head or any of these people.
To put things in maybe day-to-day terms as an investor, you're a former research analyst at Goldman Sachs and on the boards of various companies. If the energy transition era is in fact ending, what does it mean for investors in the traditional energy industry like oil and gas?
I mean, I think it's as exciting of a time really in my career, and not just currently, but frankly, the last couple of years, and I think the decade ahead, to be thinking about energy. There's a realism and a pragmatism coming back. We're coming off a really poor decade for traditional oil and gas, which was too much shale, demand slowed down, all these kind of things. And now companies have gotten the message, you have to start with profitability. I think what the technology sector is bringing to the table is this recognition that demand is going to keep growing. Now, some of that's for transportation fuels, a lot of it's for power demand, and that the tech companies understand that having part-time power doesn't work. And so there's probably, frankly, more excitement about what is going on with the power sector. AI is the buzzword that drives a lot of the thinking, but frankly, we have aging grids and too much intermittency and too much premature retirement of baseload in the rich countries. The developing world is moving up their economic and energy S curve, so they've got just naturally rising power demand, and all of this is being boosted by, I'm going to call it digital transformation, another buzzwordy kind of label, as well as quote artificial intelligence and that trend. So a number of different drivers. Power sector can be very different than traditional oil and gas. I think all of it is very interesting. And there's the Mark Andreessen of Andreessen Horowitz line, software is eating the world. It's a great line. It's been very true over the last decade. I think what everyone's understanding now is all software requires hardware and all hardware requires energy or power. And even the technology companies get it. So, tech's exciting. I get why people like that sector, but energy has been pretty inexpensive on a valuation basis. It's a much smaller portion of the market than it used to be. The profitability is better. The growth has been underappreciated. So I think you still have to go company by company and subsector by subsector. But again, I think it's a very attractive time to be an investor and start looking at the energy and power sectors.
Despite positive sector tailwinds and the end of the energy transition era, certain energy indexes, for instance, Canada, were flat last year. It maybe wasn't on a sector basis, didn't outperform. Why do you think that is?
It's a good question. And I would say, while the overall outlook for energy looks good, we might have to differentiate between some of the different areas one could and can invest in. So I've highlighted in my work the merchant power producers, names like, and this is the US names, Vistra, Talon, and Constellation. Since mid 2023, they've actually outperformed NVIDIA, right? Greatest company in the world, apparently, and they have done better than NVIDIA since, and NVIDIA did well before that, but since mid 2023, a recognition that power is tight and we need to focus on that side. I think with crude oil, I've resisted using the term super cycle. I've used super volatility or super vol as my sort of framework, which means we're not in a robust GDP period. We don't know how the apparent tariff trade wars that President Trump has talked about, how that might impact global GDP. The assumption is probably it's going to be negative, but on the other hand, we don't know. Perhaps it could end up being more positive or spur different actions that could end up being positive. We shall see. But in that kind of environment, where we push back on peak oil demand, but that's not the same thing as saying in the next 3 to 5 years we're going to have booming oil demand like we did, say, 20 years ago. So around 1 million barrels a day of oil demand, I think that can get met with some amount of remaining U.S. shale growth, Canada, Brazil, Guyana. Never mind if oil went to say 80 or 90 or $100, I suspect you would get a shale drilling reaction to that. It's certainly not been proven otherwise. So oil looks more balanced, or certainly not undersupplied, and that might be a big driver for why the indices didn't do as well, since I would suspect, especially in Canada, your largest companies are some of the leading oil producers in the world, all of whom, by the way, are really good companies. I'm going to get in trouble naming them, but Canadian Natural, Cenovus, Suncor, Meg. I'm going to forget a few, so I apologize to those listeners.
Tourmaline,
But those kind of, say again?
Tourmaline and Topaz.
Tourmaline and Topaz, absolutely. There are probably more than that now. We've named too many companies, but I think the Canadian oil and gas sector is a very attractive sector to look at. We can debate the exact timing. It's not investment advice, but the historic profitability is good. The reserve lives are long. They're generally been underappreciated in a very kind of shale is booming kind of world. And the world is going to need a healthy and vibrant Canadian oil and gas sector. So I think they are worthy of at least people spending time on, even if the indices, and maybe because the indices might have lagged a little bit last year.
Quality names will perform via return of capital or share price appreciation eventually.
Yeah, absolutely. You always need growth and returns. It's one of the things. So after the last tough decade we had, investors said you tried to grow too much. This is probably more true of U.S. shale producers than Canadian oils, but I guess it applies to both, and therefore focus only on returns on capital and dividends. And I get a course correction was needed. If profitability is poor, yes, the first order of business is to improve it. But what you see across the stock market, you see this with the Mag 7 in the US, is they generate outstanding profitability. This was in a recent note of mine, 40% average returns on capital with very little volatility, and they've grown revenues 10 to 30% per year on a consistent basis. So that is really attractive. I'm going to say high growth with very high and stable returns on capital. Now, could be very tough for a commodity sector like oil to compete with that type of profitability and growth. But there is a duration and sustainability to this business that may not exist for tech companies where you always have to worry about technology disruption to your core product. That's not really true for oil and gas. So the returns may not be as good, but for the leading companies, I think that's what we're looking for. But the market got too focused on just the return. You can't ever not have good returns, but it is going to have to come with some element of what competitive advantaged area do you have? Maybe it's through acquisitions, maybe it's organic. How do you have some element of growth? Certainly per share growth is the metric we'd focus on, cash flow per share growth to go with, I'm going to say double digit to mid-teens returns on capital over a full cycle.
In the past, the cycles of the sector may have been pinned on the supply demand of the commodity, but to what extent do you think the credit lending and the capital markets influence energy industry, where as soon as capital starts to loosen up, things expand? Do you think about it that way?
I do. And in fact, I think I'd describe it as the cycles tend to be 10 to 15 years in duration both ways. So 10 to 15 years up, 10 to 15 years down. We're coming off a decade plus. I mean, frankly, the super cycle in terms of the index waiting for, I'm going to use American stocks here, I apologize. There was an '08 peak and it almost repeated in 2011. You can pick your year, but it's been well over a decade of sort of capital outflows, maybe some stabilization in the last couple of years. We've not quite seen yet the return of capital to the sector, the return, capital coming back in. Now we are seeing that in the power markets. You've seen a huge re-rating in those merchant power names, a renewed focus on, power more broadly. We're seeing people that service those industries, the GE Vernovas and Siemens of the world. They had fallen with, quote, new energy down cycle 2 years ago, and now they've made a big recovery as the capital is flowing to areas where the market thinks you're going to get growth plus returns. And, not just one or the other, but both. That hasn't quite happened yet in oil and gas. We are starting to hear some rumblings that the world's going to need LNG, and the world's going to need natural gas, not just here in the US and Canada, but in Europe and elsewhere. And so there might be some early stages of people turning back to the natural gas value chain. Now, that doesn't mean, wouldn't equate that with we're bullish natural gas prices. There's a heck of a lot of resource to be developed. But if you can be a low-cost operator, that may be a way to generate returns. If you have a global LNG business, as some of the larger companies do, that may be the way to go. If you provide gas turbines, as that may be the way. I think you have to figure out where in the value chain that you are. But I suspect power is already getting people to come back into it. Natural gas is just starting to get people to come back into it. There's excitement over the nuclear value chain that can be long-term in nature. We've not seen that same excitement come back to the oil sector yet, but that gets into the comments of sort of sluggish GDP growth, China slowing, shale mature but not declining, and otherwise growth in a few other countries and a little bit of OPEC spare capacity right now.
It's kind of chicken and the egg question, but do you think it takes the credit window opening to spur growth in the energy sector, or is it a commodity demand? Is it hard
I,
too
I
hard?
will say it'll, yeah, sorry, Trevor. I will say it will be demand where supply starts struggling to keep up with the demand, and therefore you get a profitability cycle. So profits will go first. And so we had a big profit upcycle from the trough of 2020 to, I'll say, the Russia-Ukraine peak in 2022, early 2023. But I think the market was rightfully suspicious. Yes, it was never as bad as COVID. Yes, the companies are better than they were last decade, but it's also not as good as we're getting right now here at the heart of the Russia-Ukraine situation. And the market was correct to say, I don't trust this yet. And of course, sequentially, returns on capital have been on the margin deteriorating from very high levels to still good levels, but going down. Earnings revisions have also been negative, and in that kind of environment, this is, it's going to be tough for capital to want to flow back in. So you're going to need some stabilization in that. We're going to need to get back to positive revisions to have the sequential cycle of down return on capital stop eroding. So when people, okay, we're definitely not going back to the 2010s, and we are at a period of better returns on capital. Profits will come first, and it could be because of demand, it could be for whatever reason, and then will come the flows of capital. Again, as we've seen in power, as we've seen in the technology sector, it is this dramatic growth in returns that has driven all the excitement for technology stocks.
Do you see U.S. shale ramping up again in a bad way, or how do you think it?
I like the description of in a bad way. I'm going to say it's going to be an unsatisfying answer in that I don't think we go back to the days of 1 million barrels a day per year of shale growth. There's no question the plays have matured, especially the Eagle Ford and the Bakken. I'm talking at the basin-wide level. Individual companies may vary. And while I think we will still have growth in the Permian, it is probably at a less robust growth rate, all else equal. What I think isn't proven yet, and I have a lot of debates on this, is the idea of in US dollar WTI terms, we went from say 70 to 75 up to 90 to 100 or higher. And let's just say it wasn't because of a war or something that people viewed as temporary. Maybe China starts growing a little faster or whatever the reasons are. If there's a view that this is sort of a supply demand driven cycle, I believe shale would start growing again. And especially with the consolidation we've seen amongst sort of a handful of larger companies, who, by the way, are just undergoing all these digital transformations and move to modern cloud data infrastructure and so forth. And so technology can't necessarily create oil. It obviously doesn't, but it can certainly help the extraction of improving recovery rates and getting more out of existing wellbores and so forth. I think there's a long way to go on that. I'm sure we'll have ups and downs in terms of shale supply, but the idea that it is kind of never going to grow again, or that is totally unproven. We've not seen prices go up and not have some sort of supply reaction. So let's at least see that first. Let's go to $100 and let's just say we stay there and it's not driven by a war or some temporary thing. And then if supply disappoints, if you will, or doesn't accelerate, then we can probably start declaring, hey, maybe this is more of a structural super cycle at hand. I'm of the camp that shale with higher prices would start, and it's critical, all the words matter. At higher prices, I think shale would start growing again more quickly.
It's hard to quantify, but it's never a good idea to bet against American entrepreneurial uh, ambition.
I'm going to give both sides of the border credit. There's plenty of entrepreneurs, and it's not just because you're the host here, Trevor. It's really both sides of the border. I'm very positive on Canada's oil sands region, and I have been for some time. Those are terrific companies. But the Montney and the Duvernay, I think, are both really interesting plays. I would like to see Canada get to a point where they adopt their own version of, I'm going to say drill baby drill, but really more specifically build baby build. The idea that we should enable and encourage businesses collectively to grow, to export oil and gas to the west coast of Canada, and gas and LNG. Why do we have an LNG boom in the US when frankly gas is more stranded and in significant quantities in Canada? Whatever happened to the Horn River Basin? What about the other gas plays, including the Montney, where I believe we now have a gas line, Coastal Gas Link, I think is what it's called, that can ship gas to the West Coast. Trans Mountain just started up. How does Canada, perhaps in reaction to President Trump's tariffs, whatever the drivers are, really get behind business and really get behind its aggregate energy industry? And I think I've gathered that Canadians were not excited about any of Trump's rhetoric around tariffs. Whether you like the rhetoric or don't like the rhetoric, and I gather, again, most Canadians completely dislike the rhetoric, if it turns out to be a unifying event where the left and right within Canada can come to some sort of better understanding of what's in the best interests of Canada, it can't be to be solely dependent on a singular customer. There's a certain amount of integration that I think should maintain. I believe both countries should be close partners in energy and that together we should try and dominate, that we're going to need Canadian heavy oil to balance maturing shale, that from a refining perspective, it makes sense for American refineries to run Canadian heavy and then export light products. I think it's to the benefit of both countries to have healthy cooperation. But if there's going to be some disagreements for whatever reason, I am excited about the investment opportunity in Canada as a lifelong American analyst, because I think there's an opportunity here to overcome some of the barriers around getting behind the oil and gas industry specifically and creating export and infrastructure opportunities to compete with the US and to compete with countries. We should have more Canadian LNG exports. I don't understand why. I understand why we don't. I absolutely would in favor more Canadian LNG exports. I would favor ultimately a faster growth rate in the oil sands. Now, whether that requires a higher oil price or not, no one's saying lose discipline. What I am saying is, if you look at the return on capital for oil sands producers, it is competitive with any super major. Again, no one's saying go crazy like you did in 08. I'm no way arguing that. What I am suggesting is as the shale matures, there's an opportunity for some amount of that long-lived oil to be sensible for, frankly, the rest of the world. US oil demand is pretty mature. So why not figure out the west coast of Canada is just across the ocean to China and sort of across the ocean to India and other, like, how is there not more focus on Canada? How is the Canadian Arctic not part of this conversation in the same way Alaska should be part of it? So I'm very excited about the potential business opportunities in Canada, but I can't sit here and lecture Canada that they need to agree and figure out export infrastructures and push back on Trump. Canadians are going to have to figure out that for themselves. But I do wonder if the Trump rhetoric won't be a positive catalyst for a better conversation about how to incentivize business in Canada. I apologize for the long rant there, but it's something I am actually very excited about. So,
Well, as a Western Canadian who has an energy focused podcast, I think you're preaching to the choir. But as a former,
Trevor, I'm sorry, one more thing to add. There's no reason Canada shouldn't be part of the new energies equation as well. So I'm probably less of an expert on exactly where Canadian companies are, non-oil and gas, in terms of batteries or solar or any of these other things. And some of it doesn't quite seem, I don't usually associate some of that stuff with Canada, but I also could be wrong. So there's plenty of smart people in Canada. You attract plenty of smart people from all over the world. And so there's certainly non-oil and gas mining opportunities in Canada. So what critical minerals and how do you figure out how you can refine it? I'm talking about Canada. So the world, forget about America. So the world doesn't have to depend on China for some of this stuff. And how does that, so maybe I don't know if Canada, is going to be an electric vehicle giant. It doesn't strike me that it's going to be, but you can tell me if I'm wrong. But certainly the critical minerals mining, all those kind of things, I'm almost certain that Canada has got its share of those kind of resources. We could use refining in Canada. Let's do it. Why wouldn't you want to do it there? Beat the US to it. We're going to have all these, you have fewer provinces you have to deal with than we have states to deal with, right? So it should be more doable in theory in Canada, and figure out ways where Canada can be energy dominant, exporting oil, LNG, but as much of this other stuff as makes sense for Canada.
as a member of a couple of rather influential energy company boards, and the fact the Canadian dollar is discounted about 30% to the American dollar these days, what do you think is the catalyst for American buyers to come up north? It would seem obvious right now, but do you think Americans are looking up north at assets, or will it take a change of government? How do you think about that?
Well, let me just speak generically about the investment opportunity for companies or investors in Canada as opposed to anyone specifically. And I would just say this. I think at the corporate level, there's a pretty poor track record of US companies figuring out when to go to Canada. And it always feels like they kind of buy well into an upcycle. They don't, for whatever reason, execute well enough, and then they sell closer to the bottom. And I think that sort of mistiming of capital allocation has been very good for a whole bunch of Canadian companies. I will name one company. I remember when Canadian Natural Resources bought, I think it was called BP Amoco Western Canada. I'm blanking on the exact name, but as I understand it, they didn't pay a lot for what turned out to be the Horizon asset. And now this is obviously a major wall of cash flow. I think that is a term they use. And that's just one example. There are many more than that. So I think at the corporate level, it's been tricky. And I don't know, I don't have good advice and I am in the business of advising companies. So I advise them that I love Canada as an investment opportunity, that it's underappreciated, that shale is going to mature. And so whether it's the Montney, Duvernay, or figuring out the right oil sands partnerships, we should be considering it. Maybe it's other opportunities, stranded gas that can somehow turn into LNG if the investment climate improves. Maybe that's the opportunity. But whether American companies will do it or not, the track record is generally not very good. It's generally been done particularly well by Canadian companies. I think for the investor base, I think it gets back to, will people gain confidence that oil demand is going to at least grind higher? What is the evidence of shale maturing? There's probably a little bit of a supply demand element to it. I do think some of the companies that we named just a few moments ago, I mean, I think some of them do attract U.S. investors, but I think U.S. investors have also not always had the best timing in Canada and being way too generic there. I'm sure there's some that might have, but I certainly personally spend a lot of time trying to understand what could be the investment opportunities in Canada, either as an investor or in terms of giving corporates advice. And it's worth doing the work, especially if we have this catalyst of Trump tariffs inspiring the left and right in Canada to come together. And I hope it lasts. Maybe the tariff threats go away. Trump won't be president forever. And there are not too many other presidents that have sort of expressed as much fondness for tariffs. So it's quite possible the tariff threat will either fade near term or certainly fade when his term ends. That shouldn't change the fact that Canada has a tremendous opportunity to be, again, energy dominant. That's an American term now, but energy dominant in its own right and provide the energy the world needs. Canada is ultimately a small country from a population standpoint, but it has substantial resources that people in India, that people in China and other parts of Southeast Asia clearly would benefit from having as they try and get the kind of lifestyles you in Canada get to enjoy, and I get to enjoy as well in the US.
As an energy expert who understands the nuances of tariffs, are you in favor of that strategy, or does it depend?
This is going to be, again, another unsatisfying answer. So I would say, as someone who had a Wall Street career and all this kind of stuff, I would be instinctively in favor of free trade with, essentially no tariffs. But again, I'm also going to put myself in the bucket of someone who worked on Wall Street and benefited from global finance, and where the closing of factories in my hometown, there, to the best of my knowledge, the town I live in has never had a factory, or at least not the kind of factory that, suddenly was unemployed because those jobs got shipped to Mexico or China. So I think it has been a mistake for free traders like myself to either ignore or pretend it didn't matter the devastating consequences of not having a healthy middle of our country and manufacturing base. And so there's no question an adjustment is needed. When people say it's unrealistic America could ever bring back these jobs, no one has an alternative plan of what we're doing. And I think we see in a world where geopolitical tensions are not what I grew up with, which was sort of the U.S. against the Soviets. It's not that type of tension anymore. We saw in the pandemic and COVID what it meant to be very dependent on China for PPE and masks and all these kind of things. There's no question some amount of reshoring makes sense. You can't reshore everything. You can't be a closed economy. But I do think people like myself that spent our careers on Wall Street being kind of pro-free traders, we need to provide better solutions for the folks that are left behind, and not just empty rhetoric that we all benefit from low inflation and that we all, we can all buy iPhones and drive cars. So what's really so bad about the situation? It is not good in some of these communities. Maybe it is. Maybe it's going to be data centers and that development and where you can locate these things. How do those communities compete for capital in the same way I'm sort of arguing that Canada ought to start competing for capital if they can kind of get behind the pro-business type environment? How do other communities in our Midwest figure out ways, just as Texas has attracted a lot of businesses and a lot of energy investment, and North Dakota has attracted it, how do we bring that to different parts of Pennsylvania and Michigan and Ohio and all these sort of districts? But so am I for tariffs? Instinctively, no. On the other hand, I'm respectful of the fact that I didn't observably ever care about those loss of jobs. And I feel terrible even saying that. And so I think, I still think tariffs are imperfect as a solution, but something is needed. And so I will give President Trump credit in this case that at least he is sticking up for those people. It's certainly more so than any of us on Wall Street have done.
The energy landscape in the US is changing. with shifting attitudes towards traditional energy and energy in general? Maybe with the appointment of Chris Wright as U.S. Energy Secretary, what do you think the implications are of that shift in attitude and with people like him leading the department?
I mean, I think it goes back to where we started, which is a newfound energy pragmatism. It's going to be sort of the focus of upcoming super spec issues, the rise of energy pragmatism. Now, again, Chris Wright is the Secretary of Energy. He's not the President of the United States. So to me, energy dominance to me would mean US plus Canada working very closely together. I suspect, I can't read President Trump's mind, that it wasn't really the energy issue that's the issue. There were other reasons that have either he's articulated or not, but it's probably beyond the scope and probably beyond the sensibility of me to comment on it. But so, it's not purely up to Secretary Wright, as we're finding out. Again, I'm in favor of importing Canadian heavies and exporting light sweet products. Like, to me, that's a good thing. I'm in favor of Canada exporting more of its oil and gas off its west coast for its own benefit and the benefit of the world. And so I think our sort of pragmatism will be stressed at times. Certainly, the idea that we should be dominant in all forms of it. The other aspect of I think the current administration in the U.S. would be we are already dominant, the United States, in oil and gas.
Mhm.
Uh, you know, I like the focus on nuclear. It might have started in the last administration. I think it will accelerate in this administration. But I do think the other areas of new energies are things we should also want to be at least competitive on. Whether we'll be dominant or not, we shall see. And that is an opportunity for manufacturing jobs to come back to the US. And that includes mining and refining, refined minerals, copper processing, and all these kind of things are things that we could do a lot better job of. And we don't hear as much rhetoric about those points. We hear sort of the reshoring point, but not specifically tied to new energy. So I would like to see us dominant in all aspects of energy and to recognize a country like India is not just going to want to be importing shale oil. They're going to want batteries and electric vehicles and all this stuff. And how do we, again, compete with China better on some of those fronts?
Speaking of other aspects of the energy markets, why is power becoming such an important aspect? And sometimes it's as important as the oil markets. Why is that?
I think this is one of our great hopes of the last year. Would that be that the technology sector will be the salvation for, I would call, the ideology of net zero is all that matters? That if you're a tech company and you're building data centers and you're trying to solve AI and autonomous driving and humanoid robots and all these different kind of big technology, all of which requires a whole bunch of data and therefore, data farms and data centers and so forth, and therefore power for those data centers, and the power has to be 24/7, 365, not a lot during the daytime, and then you have a 4 hour battery that depletes after 4 hours. Like, that doesn't work, right? So I think the tech companies have gotten a real education to their credit and they've taken it to heart. They needed to understand energy better. They might not have understood it. They didn't need to in prior years. They do now. And if you meet with them, you'll find they have really ramped up very quickly on what it means to have reliable, affordable energy, but to also still care about some of the sustainability metrics. I think they all do still care about it. They're all California based. So some of that's not going away, but it's with the correct hierarchy of needs, meaning it has to be reliable 24/7 and ideally affordable and then geopolitically secure first and foremost. I think all of that is driving the focus on power. It is really power that's going to drive data centers, but of course, it's also the trends of aging grid, too much intermittency, too much retirement of baseload. I think all those things have why we've shifted a little bit, or a lot, I should say, towards power mattering more. And it is a nice mixture of tech optimism and growth with the fundamentals that tech is nothing. It's nothing without energy. You cannot have technology without energy, but you don't need technology to care about energy. So energy is the primary one. It's the base. Without energy, you do not have tech. And I think the world, and I think technology companies, the world is learning that lesson, and it flows through the power sector. So
There are alternative energy sources coming up, but to what extent do you think natural gas fills that demand?
yeah, and I try to be very careful about natural gas to say this is a future fuel and it's a current fuel. I think, frankly, a lot of oil and gas executives, my career goes back 33 years, and I remember in the early 90s, when I first started, people were calling natural gas a quote bridge fuel. A bridge to what?
Mhm.
Right? I mean, it's going to be a component of our mix for the foreseeable future, which I might define as, you can model out to 2050 as best you want, but what is the evidence beyond that? It's not going to be continue to be very, very important. So I think we should correctly label natural gas as a really important fuel that we use today and are going to use in growing quantities around the world. there is a question that if you're American or Canadian and you have these low-cost natural gas resources, once you liquefy it and ship it and then regasify it, it suddenly kind of costs similar to oil. So I do think from a demand perspective, there will be motivation for China and India to have natural gas as a portion of the mix. You never want to be dependent on only one thing. Japan showed us that from 1945 to 1990. As you develop and go from devastated to middle income to rich, you want a diversified energy mix. You absolutely want all of the above. And so LNG and natural gas will be part of it. But I think we got to make sure our natural gas is competitive with some of these alternatives. And I think it's going to be very attractive if you're a country like India, which is hot and has a lot of sun, to do solar. Perhaps they're going to back it up with coal. Again, if you're an environmentalist, that sounds awful. So then what is going to be the alternative to coal that competes with coal in India? Not what we think the carbon price should be, but what it's going to matter to their costs and bureaucracy and capital flows. And so can nuclear and can natural gas serve as the baseload offset to solar? Will geothermal be a part of that, especially the new enhanced geothermal? Will long duration battery storage really improve its economics to where that can be part of the mix? I think all these technologies are going to compete, and we don't take anything for granted, and we're respectful of the fact that an S curve can hit you in the face. We just haven't seen it yet in things like green hydrogen or the batteries, at least up to this moment in time. So it gives me confidence natural gas is growing globally for the foreseeable future.
Well,
And I'm sorry, there's also an alternative, God forbid, to actually have petrochemical plants and advanced manufacturing in our country. Why do we have to just sell our resources to the rest of the world? How about bringing back some of these manufacturing jobs to the US with inexpensive energy? Look at the problem Germany's undergoing through high electricity costs through all their intermittent resources and retiring their nuclear plants. They're deindustrializing. We have a chance to have the lowest cost energy domestically. So instead of just thinking about exporting our oil and natural gas, of which we should do that, maybe the balance is, and this will get me around being pro-tariff because that's going to be still tough for me. But how do I care about jobs for working class folk? It is actually then having some of those competing in the U.S. for some of those jobs where you ensure labor and environmental standards are tough, but where you're not uncompetitive with lower standards in countries like China and elsewhere. And so how do we make that a level playing field to ensure we can have the cheapest electricity and energy costs domestically, and then encourage manufacturers to at least have some of their plants come back to in America's case, our country. And I would think that would apply to Canada as well. So.
well, it's a small ad for Canadian natural gas, but perhaps the low-cost structure of the business will be a selling point to countries like India and China, who, in the case of Canada, gas is under $1 this winter. Maybe they'll realize the potential of what we've had to deal with here. It's an opportunity.
I actually think that's the right way to look at it, Trevor, which is I don't think we should be hoping for or waiting for some booming natural gas price cycle. That might happen in oil. We probably can wait if you're an oil producer for an oil super cycle. I think we'll get another one. It would be the third in my lifetime, 70s, then the 2000s, and whenever the next one comes. I think with natural gas, because it always has to compete with all these other fuels, both domestically and globally, I think the business model has to be focused on how do I keep my costs always as low as possible. And you can say, well, all producers always want to be low cost, but to really think in terms of what's the correct business model for, I'm going to call it, quote, for free gas. And I think this is a question for a company and it's a question for a society. How do we ensure that gas remains very inexpensive, but then we take the benefits of that? And maybe it is in part to have co-located data centers. Maybe it is to figure out how to ensure we don't disincentivize local manufacturing because our labor and environmental standards make it impossible to build a new plant, or it takes 10 years and you have all this red tape, but yet China doesn't have any of those same rules that we do, or whatever other country we want to name. So a low cost natural gas model I love, and some of your Canadian companies, of course, wholly exhibit that type of perspective. And then how does one think about leveraging that low cost resource into jobs and economic opportunity within Canada in your case, and within the United States in the case of my country?
As we approach an hour and get to the end of the conversation, maybe if you could, to wrap things up, if you could tell leaders one hard truth about energy that they are currently ignoring, what would it be?
A hard truth about energy that they're ignoring is nothing in energy is easy or simple. It is not as simple as saying, oh, the US has enough oil, let's just cut off every other country. That does not actually make logical sense. There may be political reasons to do that. There's not logical reasons to do that. And that's true for any aspect of it. It could be the oil refining system. It could be the timing of ramping, hydrogen or new technologies. None of it is ever easy. It is absolutely very long term. And you also can't be cavalier about it. There is nothing more important than energy. But because the industry has been so successful in bringing on resources and developments at a low cost to where their return on capital can be okay, but it's not as good as the technology company, people absolutely take energy for granted. And the vast bulk of the population is ignorant on energy. And I'm not saying that I'm 100% right. I'm definitely wrong about a lot of things, but at least I've studied the issue. It ought to be a required course in all universities, not climate, not the environment, but energy. That's what we're studying. And then within energy, we have the geopolitics, we have the economics, we have the environment, we have climate. All those things are a subset of the core topic. So for politicians, for the world, the hard truth is none of it's easy. It's the most important thing for one to focus on. You cannot be cavalier about it, and you should not take it for granted, because when you do, it is citizens that suffer. And it's not going to be the rich, by the way, that suffer. It's going to be everybody else.
I really appreciate your time for part two on this podcast. Thank you very much.
Trevor, I love your show. Keep up the great work. I'm honored to be a guest. You really do a fantastic job. Thank you for producing this show every week.
Unless there's anything else you want to add, we can end the formal conversation there.
Thank you.